Try that again. Good morning. Good morning. This is Friday, August 9, 2024. Happy Friday, everybody. Hey, yesterday at the close we were talking about possible gap up. Well, it doesn't look like we're getting that. Not at all here. So pre-market, we nosed up a little bit, but we've pulled back here. If just looking at the SPY chart, it's pretty clear what it's doing. High to a low, to a failed high, to a lower low, to a failed high, and all the way coming back down here to this big low. And so far we have this failed high. There is absolutely no reason to think that we're just not going to continue to do this until it actually stops doing it. We need that reversal pattern in here. And I suppose, it could happen. It really could. This could be the low. This could be the high. We could come down for a higher low or double bottom, and we could, break through there. That is very possible. But we need to see that. Trying to predict that, or trying to say, well, hey, this is the bottom. Let's just jump in with both feet long. Probably a little irresponsible. So keep an eye on the market. As long as we keep doing the same old thing, the same old thing's going to happen. It's just going to keep falling to the downside. A trend change requires a pattern in here. Something that says, hey, we have a trend change. So we could put a line in here, and we need to break out of that line, or like I said, we need to create that low, that higher low, and then break out of that higher high, which we're just not there yet. So keep that in mind when we're trading. Also, being Friday and all, I'm not sure that it would be worth going all crazy trading, holding over the weekend anyway. Day trading is doing pretty good here lately, I think, in this choppy kind of market. But with that said, hey, there's still some good charts out there, I think. Let's start with AT&T for a long. That is still trending. That's still working pretty good. The chart looks really, really sloppy right through here. But if we move this to a 2-day chart or a 3-day chart, see how it starts to clean it up. 4-day chart. There's your weekly chart. That's not a bad looking chart. And AT&T is pretty, it's kind of, safe's not necessarily the word, but it's slow moving, so you'll be able to just to watch it if it starts to come back on you, and it's not too damaging. With the Qs setting up the way they are, that still looks short to me. We did come down and test that 200 period moving average, but nothing has changed. So again, we have those, that high, the low, the failed high, lower low, failed high, lower low, failed high. That trend, a trend will stay a trend till it's no longer a trend. So I'm just going to watch this come down until it's not coming down. And the way that I like to trade this is through the SQQQ. It's a little less money. You don't have to put as much money in the position to trade it. And it's a long trade. But what you're doing is you're shorting the Qs with it. We can see this nice, beautiful trend. You can see that with those green dots right in there. Let's get that arrow up. There we go. Nice, beautiful trend here. You can see how we're making lows and highs, higher lows, higher highs, higher lows, higher highs, higher lows. It's doing just what it's supposed to be doing. When it popped up and pulled back, it broke out of that 50% retracement here, and it's pulling back and it's finding support about that 50% retracement. This is one of our rounded bottom breakouts, by the way. Here's the 50 period moving average here, and there's the 200 here. And this is the ultimate target for that strategy, the rounded bottom breakout. We're sitting about at that dotted deuce area now. That's that 200 period moving average with a few twists and turns in it, that dotted line right in there. So watching this to start to break out, and if it does, this looks like to me would be a nice trade for a continued move up. That would make a J-hook continuation pattern as well. If you're looking at shorting the SPY, of course, you know, shorting the SPY is just flat short the SPY, or SPXU is one, and this is another one of those inverse ETFs, and you can see how that's doing the same thing as that SQQQ was doing. We had that bullish trend right there. I mean, that's pretty nice little trend setting up. Our green dots are bullish. We're in that rounded bottom breakout again. Pre-market here, putting in a little bullish Hiromi. We're over the T-line right now. Let's just bring that down. Stop-wise, I would probably be looking at something around that 30 area. Plenty good targets up there. The dotted deuce is always a good target, and that would be right there. And then the next target would be the high, and then we'll look for targets above up there. Apple setting up short. Blue ice failure. Blue ice failure for me is when we have a chart that has been bullish. The trend is bullish. The 50-period moving average has been moving up. We come down. We sort of, you know, bounce on top of it, get below it, bounce underneath of it, basically around that 50-period moving average. And then what we have is failure up here, and that's what it's starting to look like, at least pre-market. Let's watch what it does the first 15, 20 minutes of the market here. And then that might be a nice short, coming back down and testing that 50-period or that 50% retracement area. And then we still have the 200-period moving average down here that Apple could easily get down there. Now, if Apple was to do something, because I know there's a few people looking at it long, for Apple to be long, it's going to have to break out over that downtrend line, probably something around 220 maybe, and that could set Apple up for a long. But right now, that's a blue ice failure short setup right there. Apps, AAPS, whoops, AAPS. That's still not right. Just a second here. Too many A's, not enough P's. This APPS, man, had just fired up big yesterday. So now that we're out of that big candle the next day, this might be a nice little trade here. I'm gonna watch how this acts through here. I'll put that line right in there where that low is, because it also matches up over here on the left around May 17 over here. So what I'll be looking for is a buy above $2.60 here, and then we'll look for it to travel back up toward that 200-period moving average. Now, it's not going to go in a straight line. I know that. So watch for the zigs, watch for the zags, watch for a little bit of profit taking, maybe watch for a better entry. Entry might not be today. Entry might be in a couple of days right from here. But I do think this is a pretty nice little chart. It is really kind of carved out a bottom. We've broken out of that carving. Big gap up on some pretty good volume. Let's keep an eye on that. $2.70 chart there. Not too bad for those that are looking for those lower price ones. What time is it? Oh, we have a few minutes. Walmart. So we're still hanging short with our Walmart. My stop is around 68.30, 68.40 up here. So we'll see what Walmart does. Yesterday, we ended up with this, we'll call it a Hiromi, I guess. Yeah, we'll call it a bullish Hiromi. If we start to get follow through, I'll be stopped out right up here. Of course, if it doesn't, I'm going to stay with it and see if that doesn't roll down. Remember that Walmart has earnings on the 15th, so that's something to keep track of right there. Yesterday, during our pre-market, we talked about X moving up, and it moved right up, just came within pennies of hitting our first target up here. Now we're getting a little pullback, which is perfectly normal. Stock's been up 1, 2, 3 days, rest, right? Pretty standardized trading move right there. So let's watch for a rest in there. That might create a new buy for somebody. Break through that 42.60. Let's see if we can get up to that 45.25 up there. That's a pretty big space right in here, so we may see another little pullback or a little bit of rest before we actually get there. All right, now let's take a look at the diamonds before we get too late here. So the diamonds, we're down to the dotted deuce, just nailed it. I love that moving average right there. It works so well. Down here, we've rallied up. We can't get through the T-line. We can't get through the 50-period moving average. Let's get rid of that. There you go. We can't get through that. And that's something we need to get through before we go anywhere. This double top on the diamonds, pretty harsh up here, pulling back. So we need that, again, we need that chart pattern, that reversal pattern that actually reverses it. We need to visually see it to put trading in your favor. And what I'll be looking for is, well, something like that right here. See how we've gone to those green dots. Let those green dots run 10, 11, 12, even 15 days, and then watch for the pullbacks, for the entries. Let it prove itself before we start getting in there really big. So the transports, they're popping up this morning. That could be very helpful for the market. That could be extremely helpful for the market, but it still needs to pop through all that downtrend right there. So it's doing a great job right now, but we need to get through that area. Take a look at SMH. That's still down. Right now, I think there's just a bit too much weight on the market, and it's going to push those longs down, so trade cautiously. All right, everyone. Hey, thanks for listening in. I appreciate it. We'll see everybody in about 30 minutes when the market opens up on this Friday, okay? Thanks, everyone. Take care. Later.